The markets did something today that really shocked and surprised a lot of people. They simply had a red day. It didn't keep going up. Some of you all have gotten too spoiled by this market that's continued to climb for weeks and weeks, ever since really the lows of April. We've been steadily climbing higher. I thought that we would run up through the month of June, but we really ran up through the month of June and through the month of July. Now, here in the last couple of videos, I've been highlighting the fact that as we move into August and September, you've got to begin to take into account the idea of increased volatility. Now, I'm going to go into a contrarian trade for you today that I think would be helpful for you guys to get a perspective that might balance the bullishness right now, because yes, we could continue to climb into potentially a parabolic move higher. It's absolutely still on the table. I'm going to take you into the SPY and give you an opinion or a trigger for that, something that I'm personally watching for, which would tell me if that's what's going to happen now, or if we're going to get an extremely healthy 3 to 4% pullback, which would allow the markets to reset some momentum to potentially climb as we were to go further into Q3. A lot of it's going to be dependent upon this week. Why? Because we have the Fed who's going to give us a rate decision. Everybody knows that he is not going to give us a rate cut. He's simply going to give us his attitude right now on the rates and on inflation. We're going to get some insight. It's going to help us determine how likely we are to see a pivot in September. That's what it's really all about. But in addition to that, 30% of the S&P's weight in companies is going to report earnings this week. So that's going to give a lot of investment firms a sense of how Q2 is going to go and what they should begin to do. Now, if certain companies begin to do poorly, and that represents a big portion of their investments, they're going to change things up. They're going to de-risk. They're not going to wait for all the rest of the companies to report earnings. So this week matters the most when it comes to how the market's going to react to earnings. Today, we saw SoFi's earnings, and it was an absolute incredible move higher. Now, this is a stock that I called out right above $14, and I said it is getting ready to explode higher with a target of $20 and then $24 by earnings, and we hit it and we exceeded it today. But there's always a big but in the room. Even though I love SoFi, and I cannot believe how beautiful that price action was that we got. It allowed our options to go up, in some cases, 300%. But the fact is that when we got up into that stratosphere of resistance, it was a sell the rip moment. Now, I'm still bullish on the shares. And I personally think that SoFi is one of these companies that I want to accumulate on any red day. SoFi is a company that I called out really back in 2022 and 2023, and I liked it in 2024, and even up here at $24, I like it. But I sold my options, and I do believe that the current momentum to the upside, clearly by the very ominous candle that we got at the top of the run, tells us that the market wanted to take profits and de-risk on SoFi. What does that mean for the long-term view of SoFi? Well, it doesn't mean too much. You're going to get some pullback. But as I've said, and I think we'll get an opportunity to buy it cheaper in the coming days. But at some point, you're not going to get the opportunity to buy it at these levels. I do believe that SoFi can become a $30, $40, $50, and $60 stock in the coming years. Because as I've said many times, they're doing banking right. They're going to steal market share from all the big bank dinosaurs that are doing banking wrong. They're bringing AI to money, and they're doing it better than anybody else. And so they're going to eventually rise and surpass their peers. That's what I believe about SoFi. But I do believe that we'll be able to get or reload on some options once momentum cools off after this incredible spike up. I called it perfectly in the Stocks with Josh Discord and on this YouTube page. I literally called it the day before it took off like a rocket. I'll try to do it again. But for now, I took profit. Right? I'm holding shares, but I took profit on the options. You do what you want to do. Let me know in the comments section how much money you made on SoFi. It was an absolutely beautiful play, but I got more for you guys today. But let's get back to why this week is so important. Fed rate decision. He's not going to do anything, but he's going to talk at 2 p.m. Analysts will be hanging on every word to interpret what he does in September. And then on Thursday, we get the Fed's preferred inflation gauge, which is the PCE. The headline PCE is expected to tick up, while core PCE is expected to remain flat. But if it comes in softer, then it's going to leave everybody to believe that we are going to get cuts in September, and the market could run on that news. But it's not the only thing that the markets are watching this week. We're going to get a final verdict on the China deal, whether or not tariffs are going to get kicked down the road another 90 days. On Friday, August 1st is that deadline. And I think that the policymakers have been signaling that they will kick the tariffs down the road. Now, if for some reason they don't and they raise tariffs on August 1st, then I can tell you that I'm going to believe that there's a ton of insider trading going, especially if we begin to see money flow come out of big tech. And then that were to happen, I'm going to be believing that there's some dirty rats in Washington talking to the dirty rats in Wall Street. So it'll be a very interesting week to see what plays out. But here's what I wanted to highlight to you guys. It's time to pull back and use my number 3 discipline, which is to control position size. It's an extremely important discipline to use right now. We trade the trend, we use the stop loss, we control position size, and we don't overtrade. But position size is important now because July was a very profitable month, and you don't want to give back all the money you've made in the recent run-up through volatility in a handful of days. Don't be shocked. There are red days on Wall Street. We just haven't been seeing much of them in a while. Okay, let me take you guys into the SPY, and I'm going to give you guys my view of the trigger that I'm watching for to determine whether or not we're going to get a blow off top or whether it's time to get that 3 or 4% pullback. Let's go look at the SPY chart. All right, we're looking at the S&P 500 as measured by the SPY. Each of these candles represents a month in the market, and you guys can recall back here in April, I talked about the fact that we had gotten an extremely bullish Morningstar pattern. That's where you have this flush candle down met by a doji candle, which also was very bullish. And then it gets confirmed if the green candle or if the next couple weeks or months of candles closes above the opening price of this red candle, which was back at 596. We talked about the fact that when we got above 596 that we had confirmed for this move higher, but I want to recap our target. Did we hit our target based on the Morningstar pattern? Well, that's not too hard to measure. All you do is you take this neckline and you run it down to the body of this candle, and then you can move that to the breakout point, which is right there. And if you look at that, we have absolutely hit our target really almost to the penny. We have fulfilled the bullishness of this Morningstar pattern. We've officially finished it. Now, here's the next clue or the next trigger as to determine whether or not the markets are going to be rocketing from here. So let's call that 640 level that we got to, let's call that resistance or the completion of that previous pattern. It would be a form of structural resistance. A lot of analysts will be looking at it, and that's where they would likely be taking some profit. Now, we could have pushed through it and then sold back underneath it, and we could still do that. But here's what the analysts and myself are going to be watching for to determine whether or not this is going to continue to run through the month of August, September, October, and November. And we're going to get that beautiful blow-off top pushing the market all the way up to 650. And many analysts have it in the 700 level at this point. What would we be watching to see if we were going to get that? Well, we have to see candle expansion and volume increase at resistance. So what does candle expansion look like? It means that if we look at the last 3 candles, they were all roughly the same size. It means the bullish move from month to month since we got that confirmation has relatively been stable. But now we're at resistance, and what we're going to be watching for is sideways action or a candle that begins to not expand, but compress, basically get smaller. So if we begin to go through the month of August and the monthly candle begins to be smaller, the weekly candles are smaller like little dojis, or they begin to really slow down in size, even if we go higher, that's a pretty good early signal that we're not going into a blow-off top. Now, personally, I think that when we get through this week, we're going to see the market's reaction because enough companies, as I said, will have reported earnings this week that the market's going to basically take a position on everything. The heavy hitters are going to lead the way. We've got Microsoft, Amazon, and Apple, as well as a lot of other companies reporting earnings this week. Now, you know I'm in an Apple position. But let's talk about position size. I actually increased my Apple position today, still maintaining a bullish view as we get closer to earnings. We're going to find out soon whether or not that was a smart decision. You got to remember, we're aligning ourselves with smart money, which was largely favoring an up move through earnings. May not go that way. Nobody's got that crystal ball. Here's how I've hedged myself if it doesn't go that way. So for me to be able to increase my Apple position, I had to close up some other positions, such as the SoFi position and a couple others. I decreased my overall risk so that I could increase my risk in things that I had conviction for. Now, I'm only mentioning to you that now is the time to reorganize and to reposition yourself and to take risk into consideration. And on that note, I'm going to show you one more play that could be explosive in the month of August. I've been introducing this one into my Stocks with Josh Discord over the last couple weeks, and that is the VXX. This measures fear in the market, and the bottom line is we're getting very close to a traditional buy trigger on fear. How do they measure fear? Well, they measure fear by institutions running out and buying puts to cover their long positions. If put buys go through the roof and ramp up, it means Wall Street's bracing itself for a downturn. Right now, the markets are calm. They're in a very low insurance position, which means they're not expecting huge risk just yet. But we had a little bit of a melt-off day today, and it doesn't take much for that to slowly go from a drip to a waterfall. Let's go into the VXX, and I'll show you what I'm watching there. So we're looking at weekly candles here, and I'm going to keep this very, very simple. Every single time that the VIX has gotten down here between $40 and $41, it was a very good time to buy. At this point, it went from $40 to $90, roughly a $50 push up in just 3 weeks. All that would take is for the markets to want to pull back. Right here, we went from $41 all the way up to $57, a $20 jump in really just 3 days. We can see that we had another big jump right here. We went from $41 up to $91, another $50 move in about 2 months. And here we are sitting on 41 right now. And so does that mean that we are absolutely going to begin to move towards volatility? No. But we watch the SPY. We know that we hit our up target. We know that the bullish candlestick pattern that I brought to you perfectly got fulfilled to the dollar. So we know that that's complete. Now we know the market needs to decide what it's going to do next. We know that it will decide that this week. We should know after big tech reports their earnings. We're going to go through some volatility. We're going to get some news on Friday regarding the tariff war, and then the market's going to react. Personally, I think the best time to increase your risk is going to be Friday. That's going to be a great buying day for me. If you're in the Stocks with Josh Discord, you can expect a lot of posts that day as I'm going to be making a lot of decisions. I'm going to be watching the market. It could be that we load up on puts. It could be that we short the market, or it could be that the market begins to run. And if we see that volume and those expansion of candles, then we want to jump on growth stocks and ride them higher. Taking it day by day. We're following the charts on this page. Guys, I appreciate you watching my video. Hit the like and subscribe. This is the Stocks with Josh show. I appreciate you guys. Come over and check out the Stocks with Josh Discord. A lot of great stuff going on over there. I'm going to be live trading tomorrow. Come and join me. Let's make some money together. We'll do it by following the charts. Peace and blessings. See you in the next video.